Good morning, everybody. This is Michael coming to you from GammaEdge this morning. We're going to take a look at the SPX charts here real quick, the PBI BMO charts, and we'll go through SPY. Paul's posted the morning call PDF. I'll open that here in just a minute after I get done going through these charts. If anybody has any questions, feel free to post them in the chat channel after I get done with this. We'll gladly try to answer those if we can. If not, I will try to find the answer for everyone. Obviously we had yesterday was off, so we'll be starting on Tuesday today, starting with the PBI PM settled charts here. Obviously we're in a positive gamma condition, as shown there. Call dominated, still above and below. We do see a little bit of the erosion of the calls, kind of above and below, a little bit of red coming in there. Those would be puts coming in with calls being closed, but still call dominated through the whole structure of all expiries. Draw your eyes basically to 4450, large gamma strike overhead. That's where I'd be looking for some supply to come in, possible price reaction. 6 billion net delta sitting there, decent amount of total OI sitting there. To the downside, we can see the transition. It's not clearly defined here, but 4410 basically is where we've listed that at. 4400 looks to be pretty important on the downside. There's 12 billion net delta sitting there, 116,000 contracts. So when you pull back to that level, I'd be looking for a demand area to get involved. Below that 4,400, then I'd be looking to the downside at 4,375. That might be just kind of a slow march, trudge down there. 10 billion sitting there, so a decent amount of supply, or a decent amount of liquidity. That would be a demand area for me that I'd be looking to get involved on the long side. So still looking to get involved on the long side on any pullbacks. Because the conditions we're in, positive game environment, CT is still up and looking constructive. So that would have to do a dramatic change for me to not be getting involved on the upside on any pullbacks. Zero DTE, pretty well defined here. We see the supply and liquidity overhead. Obviously matches where we're at on the PM settled there, 4440. 4450 is pretty important overhead. We see the transition there. We'll definitely be watching that as we go into today. Load your TradingView scripts or TOS scripts, whichever is your preferred platform. 4420, 4425, you can really see the transition come in there. Downside 4400 still, and then that 4375 to 4380 is pretty important. We do have a significant amount of puts coming off today, decaying. That will give us positive charm flows if we stay basically above this 4425 that I have defined. Obviously, if we come under and above and still hold above that, could just give us a nice slow march to the upside. Again, any pullback, I'd be looking to get involved down to 4375, 4380. Below that, we might start slipping a little bit lower, 4375, and then below 4375, we'd be looking at the 4350 level, kind of down here for any type of support. Again, looking to get involved on the long side on any pullbacks. Plus one DTE, positive gamma condition there. 4450, you can see the confluence really coming in with all the time frames and charts and expiries there. Again, transitions not well defined here, a little bit sloppy, but the same areas on the downside. 4400, 4375, and then below that would be 4350. Coming in there on the plus one DTE. Weekly expiry here, positive gamma conditions. Looks obviously better than the 0 and plus one DTE. Call dominated above and below. We do see a little bit of the erosion of the calls up there at 4500. 4450 again sticks out pretty glaringly on the upside, so that would be a supply level that I'd be looking at if price got up there, maybe to start some stalling and slowing action, but same on the downside, 4400, then 4375. And 4350 to the downside. Here is the combo complex. Again, call dominated, positive gamma. Nothing really to say about that. A significant amount of calls building out above us at 4500, 4525, 4550, 4575. So the call speculators are still out in force and really pounding those above us. So really until that changes, again, be looking to get involved on the long side. 4400, you can see there, massive amount of net delta, 416,000 contracts. So that will be kind of an iceberg there above and below to absorb if we do have any sort of major change in the market structure. You'd probably see this start to erode away. But as of now, it doesn't really look like anything's happening. Short-term puts coming in a little bit. just to capture some downside movement opportunity for people on a short-term level, short-term time frame to capture some pullbacks in the market. So again, looking to get involved on any pullbacks as the structure is still maintained extremely well, and CT looks good. Plus GEX 4500, that continues to move up. I think that was the same as last week. I didn't check, but definitely a level to be targeting overhead. Call speculators are still out in force as we discussed. Negative GEX has moved up to 4200, so your floor for any type of pullback, any type of large pullback, continues to be moved up, which is very constructive and very bullish. You want to see that continue to slide up. And then you can see the transition there, 4280, 4375 we pointed out is pretty important, and 4450 here. So we do have a lot of demand below us on any pullbacks. Like to see maybe that negative GEX grow a little bit and move up slightly more up under price to give us a little bit more of cushioning and a floor on any major pullback, but we continue to see opportunistic put holders come in just below us, but then the call speculators are really pounding out above us. So that is definitely a bullish stance and continues to be bullish. SPY, all expiries here. We are in negative gamma condition, but you can see the calls above and below. Taylor's marked out a few levels that he was looking at for 442 on the upside, and then any pullback to 435 all the way down to 430 for me. 430 is still constructive on SPY, and where I'd be getting involved on the long side, 600,000 total ORI contracts there. So pretty massive amount. And then even all the way down to that 420 that we had for multiple weeks and months and then finally moved above is still constructive on the downside. So we'll watch zero trans and trans as I pointed out. 442 on the upside. Transition there really well defined on 0 DTE, 439, and then any pullback down. We'll start losing some of that pull down, as you can see, really, unless this is really being targeted below us, but really not much on SPY targeted below this on 0 DTE at the moment. So we'll check those on the $vol command throughout the day as well with the SPX. Transition here for the rest of the week, all the way out to Friday. Obviously 442 is pretty important on the upside, 439 here, 430 on the downside. If for some reason we got all the way down there, I'd be looking to get involved on the long side, and then 435. Below 435, the puts trail off pretty quickly here, so really not a lot of pull and push down to there. SPY without this week into all expiries past this week. Again, are still being targeted above us significantly, so bullish stance. Really nothing changes there for me, even up to 450 and 460, which is nice to see. Transition here, 439, you can see that there, and then some spattering here all the way down to 432, and then 430 would be where it'd be looking to get involved on the long side. Here's the SPY complex, some supply and demand areas I've marked out pre-market. This is from Friday's trading view script. 439 zero GEX overhead and trends is 439, as we pointed out, basically confluence on all those PBI charts that we went through. COTMP will be opening at 437. I think that's really important to the downside. We've already held that pre-market. So below 437, I'd be targeting 435, and then 433 to 432 as I discussed on those PBI charts. SPX, depending on where we open at, plus GEX is 4,400. P-Trans 4370, that's a really important supply and demand level that we basically oscillated around last week on Wednesday until we started really moving to the upside. Back up to that 4440. We had a high of 4448, so 4450 is what we discussed up there, so pretty important level. I'll be watching this. Intermediate 4400 I think is pretty important, and then nice, like I said, 4370 on the downside. 4370, 4380, I'd be looking for any involvement here, and then obviously we get below that, it'll get a little bit more slippery, possibly down to this 4340 area, at least on a TA and a gamma level, looking at that. So ES seems to be holding well. Doc and I were discussing this morning. 4420 because it was kind of that area that we broke out of. That's pretty important. Obviously this overhead supply comes in at about 4480 and 4490, so I'll be watching that. But any pullback down into this area here, I think provides a good opportunity in demand side, even all the way down to this 4400, even on ES. Would provide a good opportunity. Last line in the sand for me would be down here at 4380. Then it gets a little bit slippier on down. But again, we have multiple demand levels below us with those puts coming in on SPY and SPX, which provides us a good floor. And I think any pullback probably gets absorbed. So we'll be watching the CT this morning. We'll see how it looks. We'll be watching the SPX and these these gamma levels that we have on TradingView and TOS. I'll go ahead and pull up Paul's morning call PDF that he has out here. So GammaEdge summary for today, pretty much what we discussed. Combo out of the money and in the money call dominated above and below spot price, so that still continues. Nothing really changes on that. Zero DT folks here, kind of where we discussed 44.50, 43.80. Then some of the parking nodes here. CT did weaken a little bit on Friday, but we have the red above cyan, which is a bullish market model stance. As long as this slope continues up, this is a risk on for the market. And then we went through all those SPX channels, and we went through the landscape view. So that's all I have for this morning. Anybody else has any questions, thoughts, comments, needs anything, let us know. Great to see all the new members, trial members in, as well as existing members. Thank you, everybody, for helping us out here at GammaEdge. If anybody needs anything, make sure you let us know. That's what we're here for. We're traders, trading with you, so let us know if you need anything.
Quick question. What do you see on QQQ and IWM, particularly QQQ? I just noticed more puts in the chain, more negative gamma, versus SPX. So I guess kind of glanced at it. Did you do you have like a little 2-minute whatever to say about QQQ?
Yeah, we did see erosion of the calls. We're still above and below spot price on all expiries, though. Let me pull it up. Is calls. Yeah, so here's Qs. I looked at it this morning. We're still call dominated above and below spot price, even though we're negative gamma. The reason that's coming in is some of the larger stuff, larger strikes there above us. I did see some more come in. I think that's just going to be opportunistic on a short-term time frame. 0 DT had some puts, 1 DT had some puts, but then without this week's expiry, on out is still totally call dominated, right? So, and positive gamma. So that's kind of my crystal ball. So just opportunistic pullbacks from what I can see. They, you and I both know they were crazily stretched, right? I mean, all the tech stocks.
Yeah.
I mean, it's been so just normal pullback within the environment. We'll be hitting EPS coming up in another 2 weeks maybe or something like that. I can't remember. So
and then the fun begins again.
Yeah, then the fun begins again. So we'll start to get into that. So just opportunistic pullbacks. I think IWM, I am a lot more constructive than what I have been. Like I said, I was long versus 170. Still long versus 170. I did take some profits into that 190 overhead. I would have been a fool not to.
I'm with you. I also took some profits.
Yeah, I would have been a fool not to take profits into that 190. But that 170 trade really worked out great for us, and we discussed that multiple weeks. You and I both discussed that, I think, multiple days and weeks before we actually got that move. We were seeing some constructive move in IWM. I think we saw the largest call volume change in IWM like the week before the move. So we were pointing that out. This negative trans 180, or negative, actually that was 0 gex, and then it was actually P trans at 180 before we had the move. We saw really all this volume and calls come in and got the move. So for me, it has to stay above 180 to still be constructive and get us a kind of Q3, Q4 possible extension up to 200 would be where I'd be looking at. I did see a significant amount of those calls or those puts erode, which was really important for me to see bullish or stay bullish on that. The 170 was where that huge amount was. Let me pull this up. So the 170 has eroded some, still significant amount there. Now 180 has kind of become the target for me on any pullback, and this 190 calls overhead. I want to see these targeting start to grow. I mean, we see it, right? We see 195, we see 200, we see 210, we see some call speculators coming in, but I really want to see these start to erode, these put holders start to get a little bit more nervous and start to close those. If these start to close, then we'll start seeing a significant move to the upside. And we see expiries coming in really not until June. There's 12% coming off, and then we see a significant expiry for July coming in also. So I want to see how these next two expiries kind of run out and see where the positioning goes. I'm hoping is not a strategy, but anticipating that these puts will start to close on the longer time frame, and we'll start to see these erode, and we'll start to see some in-the-money call holders come in. I like to see these in-the-money call holders below spot price, because that tells me that these people are getting a little bit more bullish and a little bit more greedy, and they're holding more for the upside. But 190 obviously is a major supply overhead, so we'll see if we can get above that and stay above that. It's really kind of been that bogey that we couldn't get above, but we start getting above this, we really can start targeting up here to 200. So anyway, that's my thought process. So it's been a great trade. I mean, really, that 170. So that 170 POI has been POI for honestly months. Months. And trading against that 170 has been spectacular. I was kind of in and out and back and forth and just held some stuff, but we really started seeing this hold on a TA standpoint in the upper half of this range, upper three quarters. And then we got this gap up, just massive engulfing day where we blew through 180. So that really kind of got me on the watch for an extension on out. So, but anyway, so IWM obviously is small caps, and as it goes, the economy goes, and if speculation comes into IWM, then I anticipate much higher. XBI is the other one I watch. It's kind of in the same range and kind of the same thought process. So obviously, if people are speculating in biotechs, they're speculating for the upside, and that's kind of my risk on, risk off indicator. And you can see pretty much it's done the same thing as IWM. POI held 75, come up to 89.90. So above 89, 90, 95, we can really start targeting above here, and this will be a little bit more risk on, I think, for the market. Once you start seeing the financials and the biotechs start to work out, that really gives me a little bit more credibility to upside. I want to see XLF start to get in gear a little bit. This has kind of really been that bogey overhead for XLF, this 33 to 35 area. So I really like to see it kind of start targeting up here also. So anyway, that's my thoughts. So hopefully that helps everybody. I'll go ahead and stop the recording, and then